Hey, accounting scholars, welcome back to Chapter 10, Section 4. Hey, we ended Section 3 with this particular example, and it's a simple example of the impact of using FIFO and LIFO on the valuation of inventory. And as you can see here, there were three basic events. We had beginning inventory of $10 units, valued at $5 each on March 1st. March 3rd, you added an additional 12 units, but the bad news was the cost had gone up. And instead of paying $5 per unit, now you're paying $6 per unit. On March 5th, right, you sold 15 units. So that's a good thing, but when you compute your cost of goods sold, you're going to see that that's going to vary because whether it's FIFO or LIFO, you're going to be using some units from the initial inventory valued at $5 and some units from the additional purchases on March 3rd, which are valued at $6. So the math is pretty straightforward, right? So the cost of goods sold under FIFO is 10 units times $5 plus 5 units times $6. And so your cost of goods sold is $80. So that's the reason we've used the $10 for the first 10 units is because we're using FIFO, right? First in, first out. The inventory was there. That was the first in inventory. Now, the reverse is true under LIFO. The cost of goods sold under LIFO is last in, first out. So we're going to use the inventory purchase price on March 3rd for the first 12 of the units, right? And that is $6, and the last three we're going to value at $5. So our total cost of goods is $87, right? So our cost of goods under LIFO is higher than it is under FIFO. So you might say, after doing that particular exercise, you might say, you know what, this is pretty easy. Why wouldn't you use FIFO all the time? Because it reduces costs. Well, there's a couple reasons why this would not be a good policy. Actually, two reasons, right? The first is the difference in the cost of goods sold between FIFO and LIFO is approximately $7. And that results in a difference in ending inventory, but that's not a permanent difference in cost. Ending inventory under FIFO is $42, which is 7 times $6, while ending inventory under LIFO is $35, 7 times $5. So the first reason is it's not permanent. The second is in a period of rising prices, and that's exactly what this particular example showed, a company using LIFO will incur less tax expense because costs are higher, right? So you saw the cost of goods sold was higher under LIFO, therefore the tax obligation, the amount of income that you generate, is going to be lower under LIFO. So two good reasons why you wouldn't want to stick with FIFO just to reduce costs. Okay, we're going to now move on to a series of worksheets and summary sheets to show another example of the whole LIFO-FIFO concept. But it's going to be very important that you get this worksheet in your notes, which shows the beginning balance and of 11 units at $3.92, and then it shows a series of transaction, both sales and purchases, and the associated price with those sales and purchases. So Good idea to stop the video here and get this in your notes, because you're going to need this in order to proceed with the second worksheet. Okay, so the second worksheet basically maps to the assumption shown in worksheet number 1. And what we're going to do is we're going to show the impact of FIFO on purchases, cost of goods sold, and ending inventory. And as you begin to map the assumptions from the first worksheet, you'll see they're relatively straightforward. For instance, in the beginning balance of the inventory, we said there were 11 units at a price of $392, so the value of that inventory is $43.12. Then we said, oh, good news, we sold 6 units at $7, right? Well, in the cost of goods sold, basically what you're doing is you're figuring out what inventory value you should apply to that sale. And so you're taking that beginning inventory times 6 units of $392, so your cost of goods sold is $23.52. Then you actually made some purchases, which was the good news, at $9 for which costs at a cost of $441. So the value of those inventory purchases were $39.69. So you can see how the assumptions are impacting the FIFO cost sheet from the first worksheet. So make sure that you get this information in your notes as well, because this is something you're going to have to be able to understand logic-wise and explain. Okay, so we've got the worksheet done for FIFO, and now we're going to summarize the information. So if we take the purchases column, that ends up around $64.19. We total the cost of goods column, we're at $78.04. Ending inventory ends up around $28.91. And if we do the math, take the beginning inventory, take the purchases, subtract out the cost of goods sold, and then we have our ending inventory of $28.9. So in determination of gross margin, and gross margin again is sales less cost of goods sold, you have here sales of $19 units times 7, which is $133. Our cost of goods sold was $78.04 from number 2 above, and so our gross margin is $54.96. Okay, so that is under a FIFO scenario. Okay, let's try this same scenario under LIFO. Okay, so basically we're going through the same exercise, except that the inventory valuation and the cost of goods sold are going to change based on a last in, first out scenario. So here again, you're going to want to take that first worksheet and you're going to want to map those assumptions to this LIFO worksheet so you understand the nuances that are occurring in this particular worksheet. So I would stop the video here again and make sure you have this particular worksheet in your notes. Okay, so we would do a similar summary here, and you're taking the purchases column, cost of goods column, the ending inventory, verifying the math of the ending inventory is correct, and then doing the gross margin calculation. Here again, our sales are pretty much going to be the same. It's $133. The difference here is the cost of goods sold. Under FIFO, the cost of goods sold was $78.04. Under LIFO, the cost of goods sold is $81.83. So our gross margin is different, right? It's less under the LIFO scenario because prices are going up than the FIFO. We have $51.17 here versus the FIFO scenario where we're at 54.96. So here again, you want to get this summary sheet in your notes so you can follow the flow of the data. And we'll end it here, guys. And I hope you have a nice evening.